What is up, you guys? Pete Carlo here with Traders Helping Traders, and today we're going to be talking about Peloton. We're going to be going over the news that recently came out about them halting production, and we're also going to look at the company fundamentally. What I want to start doing here on the weekends when the market is closed is looking at some of the favorite companies that you guys like and that you guys want me to look at from a fundamental standpoint. We maybe won't do an entire video just talking about, an entire breakdown, because that's going to be way longer than like 10 minutes, but I would like to go over how I value companies and talk about valuations and potentially moats and all of that with you guys. So if you have a company you want me to fundamentally look over, please comment down below. And if you like one somebody drops, please hit the like button on it so that I can see which ones you guys are interested in. Now, we're going to take a look at Palantir today. And before we get into it, guys, check out our Discord. It's completely free. You guys get access to tons of courses, live streams, seminars, webinars, as well as a ton of free tools. So check that out. The link is in the description. And Peloton recently, in the past couple of months, which once was like a pandemic savior, basically, like this saved a lot of people's portfolios if you were playing this from the beginning of the pandemic, has now from highs in the past 1 year and 1 week to the day is down 86%. Right now, a lot of this is number one, because I do feel that there was a bubble back here starting to form. And the other is that I feel that the company did not position themselves well from a manufacturing standpoint, which we're going to talk about in a little bit. But during the pandemic, when things were shut down, we had plenty of people who wanted to go through and really focus on working out still. So they went and bought Pelotons. Now, Pelotons, as most of you guys know, are not cheap. I think the base bike was like $3,000. They lowered it down to about $2,000. And overall, it is not a cheap item. And on top of that, after you purchase the bike or the treadmill, you still have to pay, I believe it's $40 per month just to use the classes and basically use the bike. So it is a great business model for Peloton, but what we're going to talk about in a little bit when it comes to the actual manufacturing of the product and the warehouses that they just have filled full of stuff, it's not really working out. So let's take a look at the news that has affected Peloton. And here's the one thing, right? The news that just came out is pretty bad, but this company's been taking a massive hit for a while now, right? So we did see about a 25% drop 2 days ago, and we're going to go over the news now and then kind of talk about this business. So Peloton halts their production of its bikes and treadmills as demand wanes. The mix of Peloton and Palantir. Peloton temporarily halting their production of its connected fitness products as a consumer demand wanes and the company looks to control costs. According to internal documents obtained by CNBC, the company said in a confidential presentation on January 10th that demand for its connected fitness equipment has faced significant reduction around the world due to shoppers' price sensitivity and amplified competitor activity. Peloton plans to report fiscal second quarter earnings on February 8th. After the market closes. Now, one of the biggest things that you have to realize with a company like this is manufacturing. And for a lot of people who own businesses and you own a business where you sell physical products, manufacturing is something that's very hard to do. I currently own a business. It's a consulting and service-based business. I run a private mentorship group as well as trading alerts and all of that. And our company does very well. We're going to make about $330,000 this year just through that business alone, not even trading, not even YouTube. But the beauty about that is that it's a service-based business, which means that the overhead, number one, is very limited. And it also means that I don't have to go putting purchase orders through to go buy or manufacture products and then also store the products. Personally, as an entrepreneur, I never want to deal in that type of business ever. Now, there is a bottleneck when it comes to services, and is that you just can't work 25, 26, 27 hours a day. Obviously, it's impossible, and you can't work thousands of hours or hundreds of hours within a week. So there is a bottleneck to that, but when you're selling, something like a bike or a treadmill, you can, really sell millions of them if you want, but you have to have that product sitting within a warehouse. You have to put purchase orders in. And so what's been happening with Peloton, I make too many Palantir videos, but what's been happening with Peloton is that we are seeing these massive amounts of orders coming through and so many people buying throughout this pandemic that they really miscalculated by thinking that demand would continue to grow and grow and grow and grow. And obviously, when you look at their earnings, if you look at how the stock performed, if you look at how many people were purchasing their products, all during 2020, You would think that they would continue to do well because from what I've seen, a lot of people do like the product. There is a good community based with Peloton. And if you go and you check out like a lot of these different Facebook groups, you'll see that Peloton, the community loves the product. But at some point when you're able to go back to your gym or back to your yoga studio or back to SoulCycle or back to normal life, you're not going to be looking to purchase these bikes as much, right? So what happens is during this entire run up, and I see this with a lot of my friends who are entrepreneurs who own different businesses, whether they're, drop shipping stuff or they're just actually selling t-shirts. I have a lot of friends who have like clothing companies and stuff. They start to see scale in their business. They start to see the business grow. And then they think, okay, I don't want to run out of supply. So I'm going to put a big purchase order through with the manufacturer who's creating the product. And obviously this is on like a massive scale with Peloton, but I'm going to go through and we're going to put a big purchase order through. So number one, we get the product cheaper because we're buying in more scale. And number two, we have the product on hand. And now they just can't sell this shit. Like they just can't sell it. And so they have to shut down. I think that they're shutting down the bikes for like 2 or 3 months, I think through February, March, and then they're shutting down the treadmills for the year. And they just can't sell it. They have warehouses full of this stuff. And to me, that's just bad leadership. And I know, like I said, I'm not running a massive company like this, but to me, I think that that's bad leadership. I think that they should have seen that the demand just won't be there as the world starts to open up. And I think that they've known this for a bit. So from a fundamental standpoint, that does worry me, like that it was mismanaged in that manner from a long-term investor standpoint. But let's take a look at the actual company very briefly here on Simply Wall Street. I do really like this platform. You can use other things like Morningstar, or you can just use, Yahoo Finance or whatnot. But this is a product I actually really like. So right now it is trading at 63% below their fair value. We'll talk about that in a minute. Revenue is forecasted to grow 17% per year. Some of the risk analysis, it's highly volatile over the past 3 months. They are currently unprofitable and not profitable for the next 3 years in the forecast. As it seems, they have less than 1 year of cash runway, which is not good. We're going to talk about that in a minute. This company could actually potentially go bankrupt at some point, which we'll talk about that going through as we look into the valuation and everything. But so far, as of right now, very, very, very volatile over the past year. As you guys can see, like just looking at this chart, March of 2020, we're trading at $20. Up here in January 2021, we're trading at 160, and now we're trading back down to that $27 price range. Now, if we take a look at the valuation, as of right now, they are saying that the fair value of this company is $73.65. And there's one thing with fair value I want you guys to understand. Fair value is just analyst ratings, right? It's really, really hit or miss, and I would never take it with a grain of salt, I would take it with a grain of salt, especially with a company that's not profitable, because it is very hard to give, in my opinion, a fair value of a company if the company is not profitable, especially if they have less than 1 year of cash runway for the company. You could potentially go bankrupt. So I would not say their fair value is $73. I personally would say with the amount of risk of this company, with the drop in demand, the insane amounts of inventory they have sitting around, the limited cash runway, I would say a fair value is probably 27, 28 where we are right now, but I don't buy it fair value, right? I want to buy this company at a market cap of about $6 billion, and we're trading at about $9 billion right now. So I would be looking at this company if it was at maybe 20, honestly, at a $4 billion valuation, I would really be interested at like $15. So I wouldn't say fair value is $73, to be quite honest. PE ratio, there is no PE ratio because the company is not profitable. Future growth, they're expected in the next 1 to 3 years, estimated from 28 analysts to grow about 80%. And then you can also see analyst forecasts about 80%, like we were talking about before. But let's talk about financial health, because this is extremely important. So looking at the financial positions for this short term, they do have $2.56 billion in assets, $1.3 billion in liabilities. You can see long term, $1.86 billion in assets and $1.6 billion in liabilities. So they could pay their long term debt right now and have about $200 million sitting around. But at the end of the day, that's really not that much. You have to realize that these numbers, these asset numbers are huge because of last year. If volume continues or demand continues to stay extremely low for Peloton and they have to start like discounting bikes heavily or just not selling them, we will quickly see these liabilities grow and we will quickly see the assets shrink, which is very worrisome. And if we look here at the balance sheet, you can see here long-term 883, 1.5, other liabilities 1.1. So accounts payable as well is $970 million. Accounts payable is basically, it could be orders, purchase orders that they have not paid yet, but that they do owe. So across the board, there's a lot of financial trouble with this company right now. And I would be very worried because, like I said, overhead will continue to grow. They're not producing anymore. So, that's one thing. They won't be spending the money to continue to purchase any more bikes and stuff. But the longer that stuff sits, the lower demand. This company could be in some trouble. And I don't know how earnings is going to be coming into the next quarter because I think that this thing has sold off aggressively and really people are not expecting good earnings from them coming up. When is the next earnings date? I think it's like February 7th. So for me, Peloton is not a buy. I would not be buying Peloton at this point. If Peloton drops down to 15, I would probably think about starting a very, very small position. But the other thing too is you have to realize I'm a full-time trader. So I'm constantly watching the market. Big money has not been buying up Peloton. They just haven't. And so if it was something like a firm where a firm keeps dropping and a firm dropped with Peloton, because I think Peloton's like 20% of their revenue, a firm is dropping significantly. But when you look at it, it's like they're buying up a firm as it drops. So we'll see what happens, guys. Let me know what you think. Let me know if you'll be buying. Comment down below and let me know, guys. Thanks for all the support. Have a great day. Peace.